Hey everybody, it's Joe Bladek here, and pretty excited to just be covering off some of the three things about your credit limit that will affect your credit score when applying for a mortgage. So hopefully this video will help you with what you're doing for your mortgage and applying for a mortgage and help boost your credit score that much further. So just before I dive into it, my name is Joe Bladek and I am a mortgage broker. I work primarily out of Barrie, Ontario, and also Huntsville, Ontario, and Mississauga, Ontario. And then from there, those are my three physical offices, and from there I have reach all across Ontario. And as most people like to do mortgages over the phone, email, text, that sort of thing. So yes, three things that affect your credit score with regards to your credit limit. I'll break it up into those three things. So the first one will be what happens when you actually go over your limit. And if you have a credit card, for example, that has a $1,000 limit, then going over it by either $1 or $2 or $50 or whatever it is will cause your credit score to tumble. And Equifax and TransUnion, they have an algorithm where as soon as you go over your limit, that triggers something that month, your credit score will drop. And if you're still over limit the next month, it will drop even further and just keep dropping pretty hard. So if anything, make sure you never go over your limit. If possible, pay your balance multiple times a month to make sure that you're never actually over that limit, because it will decrease your score. I've had people be on time for every payment, never have any collections on their credit, but because they're constantly over the limit, their credit score is under 600 and they cannot get a mortgage. So the second item is being too close to your limit. So say if you have a $1,000 limit, that same credit card, and your balance is hovering around $950 or maybe even $960 or something around $1,000. And what that will do is being that close to the limit will cause your score to drop as well, but not as much as if you were to go over your limit. And if you bring your balance back down the next month, your score will recover pretty quickly. However, if you keep your balance at that close to the limit, I strongly suggest you raise your limit or spread your balance across different credit cards, because it's called utilization ratio. When you have a utilization ratio of, in this case, 95%, you would be using most of your available credit. And with that, you'd be stuck in a situation where the credit card agency will report a lower score, and because you're using too much of your utilization. So things to combat this are to have multiple credit cards open that you're using, that you're spreading the balance across, or increase your limit to that credit card so you never actually go over that limit. All right. And then third thing that will affect your credit score is using $0 of your credit card. So if you have a credit card, just one credit card, for example, and you haven't used it in the last 6 months and it shows zero balance in the last activity 6 months ago, then quite possibly your score might be now going down because it shows no recent activity on your credit score. So that is something else to consider. So the best possible area you can be in is using 10% to 20% of your available credit on your credit card. So if you have a $1,000 limit credit card, you should only be using between $100 and $200. If you have a $2,000 credit card, I'd recommend staying under $500 altogether. And just keep accepting those limit increases, but not using all that utilization. That's really going to help your credit score, help boost everything on your credit profile. A lot of people have this myth that they think that having available credit hurts them when applying for a mortgage. And in almost all the cases, that is not true. Only if you had mounds and mounds and mounds of credit available would that ever be a concern. And if it is a concern with one particular lender, it won't be necessarily the concern with another lender. There's always a mortgage lender out there that that will look at that. So yes, those are 3 items that can affect your credit score when applying for a mortgage about your credit limit. One is being over the limit. That will negatively affect your score the highest. Second is being too close to the limit. That will negatively affect, but overall much less than the other 2. If you had a choice between the 3, I would stick on not using it at all. What I recommend, a few different credit cards and have a few bills that are the same each month. So you can plan for them. Say if it's an insurance payment, that's $100 a month, a phone bill, that's $50 a month, and an electric bill, that's $70 a month. Have those all come out on your credit card and have your bank automatically push that money as it would if you were pre-authorized it out of your bank account to that credit card a few days after the payment goes through. I hope that helps, and I hope that if you have any other questions, you can feel comfortable to connect with me. My name is Joe Bladek. I'm a mortgage broker across Ontario, and I also have connections to do mortgages across Canada. My number is 705-238-3479. If you have any questions or comments, feel free to put them in the video description, just below the video description. And don't forget to subscribe to my channel. And I look forward to providing you with more updates and mortgage answers in the future. Thanks very much. And if no one has any questions, I'll end this video now. All right. Bye, everybody.